Welcome back to the mini-series. One of the many reasons why most traders fail is because they try and trade against a higher time frame narrative. In this video, I'm going to give you a simple yet effective mechanical system which is going to keep you on the right side of the market and tell you when we are aligned. Let's go. So, welcome back to episode 2 of the mini-series. We're going to talk about time frame alignment. So if you've not watched the previous video on how to map a higher time frame range, it's strongly advised that you go and do so. Now, time frame alignment is where two time frames are in line. So we enter on the 15-minute at Headwize Markets, right? This is our entry time frame, and our higher time frame that paints the narrative, the bigger picture, is the 4-hour. So if the 4-hour is going up, the 15-minute needs to go up, and that's as simple as that. If you zoom out, if you think of it as a bit of a concept, the higher time frame, if you are in a trending market, it's somewhat predicting the future. Now, obviously, this doesn't work out all the time, but if you have a strong bullish or bearish trend and your entry model presents in session and it's in line with the higher time frame, you have a lot higher probability of taking profit. So I'm going to give you a simple yet super effective mechanical tool, and it's going to keep you on the right side of the market. And the joyous thing is, right, with trading, it's always about second guessing, too many confluence, should I, could I, what do I do? If you stick to a largely mechanical process, it eliminates all of this discretion. It cancels the noise and it allows you to focus, okay? If you collect your data, at least 80 or 90% mechanical, and over a large period of time, you make money. You don't have to think, you just have to stick to your rule set. Now, if you are new to trading, this is going to be quite overwhelming, right? But if you're not new and you've been struggling, this is something that you can fit straight into your trading plan almost instantly after this video. So you should know how to map a range. This is our first range on the H4. Now, I have done the direction, right? Don't pay too much attention to the previous price. What I'm going to do is unlock this so I can move it, keep it nice and central. I've just drew a bullish range. Ignore the left. I've just picked this range because it's a good example and it's going to have the requirements that we need on the 15-minute. So when you're selecting a range to work from, first make sure the range is in a trending market and it's clear and visible. Mark your externals, and you want internal structure, but we will go into this in a later episode. But for now, this range, I've chosen this range because we're in an uptrend and we have got this sort of structure printed. So we know that price changes hands on the lower time frame. If I went with this range, for example, this range here, yes, it's a great range if you're buying in the market, but if you look closely, or not even closely, does it look like the lower time frame may be changing hands? No. So just for this video's sake, I've chosen to work on the one previous, okay? So once our 4-hour range is marked, you can use your vertical line tool if you have this set up, and you can drop either side of the range. So when you drop down to the time frames, you just know the parameters, okay? So we'll drop down to the 15-minute and find this nice little line that I've drew. That's one side and that's two sides, okay? So this is our working area. Let me try and get this better for you, okay? Because it's quite a large range, we're going to have to go from left to right, which is absolutely fine. So this is a bullish range, okay? So the first thing we do is we get our box tool. We select this box, you go into your settings, you change the color to red, you save it as a bearish range. Template, save as bearish range, and make it red. You do the same process, but blue, for a bullish range, okay? Now, I got taught this a few years ago. I used to always map my ranges out using lines, break 1, break 2, and I still do this. But when I seen this little concept, and I thought, you know what? The visual effect it has, if I was to learn this again, it would be a lot easier having something physical to tell me. instead of just drawing a nice clean line, which you'll get to, when you're learning, it trains your eyes just having a colour and a box. So assuming you've got both of your boxes ready, we're going to map our first range. Now this is a uptrend, okay? So the ranges are bullish here. What we're going to do is find our last bullish range, okay, on the 15-minute. Now we always go left to right. So as you can see here, it broke at the top. We track down to the low and we pull it to the top, and we pull it all the way to the highest wick, and this is a bullish range, okay? Now this is actually, now that's a bearish range. For some reason it's just staying red. There we go. So this is our range 1. So we are looking for buys, right? And we are in this range. However, this is the top of the range. So we expect a pullback now. When you're into trading, you'll know that you never buy when price is too extended, okay? All right. So we expect a pullback, and we are going to see this pullback in action. So we're going to pull this across. You're going to circle where it breaks with a body, okay? It can either break at the top or break at the bottom. Our next task is to go left back into the box that you've just drew. And the only way to go left is by following the candles. So imagine like these candles are like a train track. Where this box has hit a body closure, not a wick, a body, you're going to put your cursor on and you're going to go left back into the range, and you're going to follow it as if it's a train track till you can't get any higher. Now, this here is a 5-minute high, but for this video, I'm going to use this high, okay? It's the exact same process as mapping the 4-hour ranges, but it's on the 15-minute. So we could circle this. Just like the 4-hour range, this is where we start our next one. So our first task is to go from circle to circle. Still imagining that we are sticking on this train track. We're going to go left to right, and we're going to go down this time because that's the direction of the candles. Because we're going back from left to right, the only way to get there is to go down, okay? So we're going to go back to the circle that we originally drew, and then we're going to carry on down as if it's a train track until we can't go down any further. And this is our second range. Now this broke at the bottom, so this is a bearish range, okay? That's break 1 to the downside. It's exactly the same as our higher time frame. See how I've just pulled this range to the left, okay? This is so it keeps it nice and clean and concise and doesn't make it too messy. Now, what we do is we have our second range. If you want to, you can annotate it, break 1, but we require 2 breaks, okay? Then, once we've gone from the top to the bottom, we're going to pull this all the way across until it hits a body closure. There we go. So you can circle the body closure here, and then you're going to work from left to right, again, back into the range because it's going down. And we are going to follow it as if it's a train track until we can't go any higher without going down. We're just going in one direction, right? Can we keep going in that direction, or do we have to go down? Well, this is the highest point. We can't carry on going up. We have to go down. So that's where we start our third range box. Power is low. Thank you. Thanks for that. So we start our third range box here. Our first task, if you've not drew the circle, is to go from circle to circle. And then we're going to keep going down, following the train tracks as if we can't go down anymore. Now, this is up for discretion. We have this low and we have this low here. But for the video's sake, I'm going to choose this low, mainly because it gives us time frame changing hands sooner. So as you get more experience, no two trader will view the charts the same or the range breaks the same. The idea is you have data in the way you see the market, and if you're profitable, you need to cut out all of the noise and just stick to what has worked for you. If you start seeing contradicting concepts, contradicting ranges, and you alter, you will not be trading to your data collection set, and you may not make money over time. So this is our third range. Pull it all the way across to the body break. What I'll do is I'll circle this range here. And then I'm going to track back into the range to a high until I can't go any further. Now, as you can see, this is extremely tight, so I'll zoom in. We have this high and we have this high. I'm going to go for the first one, so the ranges changes hands real quick for you, so you get a good example. So I'm going to circle this for you here, pretending the candle's a train track, so we can only go left back into the range, and that's our high. Can we keep going, or do we need to go down? We have to go down, so that's where I'm going to start the next range. I'm going to start at the very top of the wick. I've drew the wrong range box because that's absolutely brilliant. We're going to start at the top of the wick again, and then we're going to pull this down to the bottom like it's a train track. You go left to right when you are building a new range, building or drawing. Let's go with drawing. Building sounds ridiculous. And then you go from right to left when you're going back into the range. This is just a simple rule set. Pause, write it down, whatever you need to do. So you remember, go through this video as many times as you want to, okay? So go to the bottom, we're going to pull this all the way across until we hit a body closure. As you can see, this is a body closure. Now, let's just zoom out with our mouse. We are in a bullish range. So at this point, our time frames are not in line. And I repeat, not in line. So in this period of price, we wouldn't even consider trading. We will be sat on our hands, executing patience and discipline, and we'll be waiting for the lower time frame to realign with the higher time frame before even contemplating getting in a position. And this is the patience that's going to separate those who do from those who don't. People think trading is sitting at the charts all day. When you're learning, you can put that time and effort in, but when you are consistently profitable, you will understand that the higher probability positions do not come around that often. You will have your data set to tell you roughly how many trades you take per week. And then you have to have the discipline, patience, and the routine to wait. And then when the opportunity arises, execute. And this is what trading is. We are following what's happening and we are waiting for price to show us what we want, okay? There's no secret to it. What makes it hard is our emotions, okay? Huge digress, but digress or digression, whatever. So we've got a good example here, so I'll continue off on a small tangent. This is a good example, okay? So draw the break. This time it's broke at the top. We're going to track down, ignore this market gap for now. I'll cover this later on in a further episode. But we're going to track down all the way to the bottom. Pretend, let's just do a big line here, look. There we go. I mean, it's a bit wonky, but we'll go with that. Let's pretend this is this perfectly straight line is a candle. So we're going to track down to the low until we can't go any further without going back up. So we'll circle that, and that is where we'll start our next 15-minute range. So we're going to go from the low left to right at this stage, so it's not confusing, and we're going to go to the high till we can't go any further without going down. This wick is the highest point. I'm going to change this to a bullish range. So this is where it gets exciting, okay? We have now had break one, all right? So we need to be more attentive in the market when our time frames are looking like they're going to align. There's no secret to this. It's just following what's happening, okay? Same process. We're going to go from left to right with our range box to this solid break. And then we're going to start again. We're going to circle the break. We're going to track down the train track till we can't go any further. Why do we go down? Because it's broke at the top. If it breaks at the bottom, we go up to the top, okay? Very simple. It won't be simple if you're new, but please don't get overwhelmed. Very simple. If you put the 20 minutes, 30 minutes a day over a short period of time, this will be second nature. So we're going to go from the top to the bottom, and we're going to circle the lowest point, pretending we're on the candle train again. This probably sounds ridiculous, but that's what I've gone with. Then we're going to start our final range here. We're going to go up the train track until we can't go any further without going down. And there we go. Ignoring anything to the right, we have break two now. So if I can find my annotation, break two, time frames aligned, okay? And this is it, traders. We have tracked our time frame alignment. If we get a entry model in our session, we would look to execute only after timeframes are aligned. Now, thank you for watching. This mini series is going to give you so much value. I'll see you on the next one, traders. If you have found any value in this video, please subscribe, like, and share it with another aspiring trader, and maybe we can help them on their journey.